Welcome back, everyone, to another edition of The Explainer. I am absolutely thrilled to be with you today because, honestly, we're looking at something truly fascinating. Today, we're decoding the April 2026 Waterloo Region Real Estate Market Report, and we're drawing directly on verified Cornerstone statistics. Now, look, if you've been following the market lately, you're probably feeling a bit of whiplash. The spring market is officially here, but the data we're seeing, it's throwing off some wildly mixed signals. We are literally looking at a classic real estate paradox, a scenario where the numbers seem to be telling two completely different stories at the exact same time. It's confusing, it's complex, but we're going to dive right in and figure out exactly what's happening beneath the surface together.
Okay, let's dive into this by asking the absolute biggest question on everyone's mind right now. It's sitting right there in the report's FAQ. Is the market actually gaining momentum? Well, when you first glance at the headlines, you might be tempted to say, no way. But as we peel back the layers of this data, we're going to see that the answer is actually a resounding yes. However, it's a very specific type of momentum, and to really grasp it, we need to rethink how we measure time in real estate.
So here's the central paradox of this April 2026 market. On one hand, total sales are down 14.1% year over year. In fact, they're sitting 26.7% below the 10-year April average, which, let's be honest, looks like a pretty severe slump on paper. But wait, contrast that with a massive surge of 35.5% in sales month over month. March saw 492 sales, and the momentum has been building aggressively since then. So, if you're looking backward a year, it seems incredibly weak. But on the ground right now, the market is waking up from its winter hibernation fast. To really ground ourselves in reality, let's look at the hard data behind that sudden month-over-month surge. 595. That is the exact number of homes sold across the Waterloo region in April 2026. This isn't just some mathematical percentage trick. This represents nearly 600 successful transactions, which is a very clear step up from the 492 we saw just a month prior in March. This number anchors us. It completely proves that despite the year-over-year caution, buyers and sellers are actively returning to the negotiation table, and they're doing it in significant numbers.
But here is where the dynamic gets super interesting. 2.9. This number represents our months of supply. For anyone who needs a quick refresher, months of supply basically tells us how long it would take to sell every single home currently on the market if not a single new home was listed. At 2.9 months, we are officially operating in a buyer's market, and this is absolutely crucial because it means that even with that massive 35.5% surge in monthly sales, inventory levels are high enough to absorb all that demand. This 2.9 figure gives buyers something they haven't really had in recent years, the gift of time. And as we all know, with time comes serious negotiation power.
Section 1. Regional Tug of War. Kitchener versus Waterloo versus Cambridge. Let's break down the geographical divide happening right now.
And this brilliantly illustrates just how incredibly fractured the region's performance is at this moment. Waterloo is pulling strong with a 16% spike in year-over-year sales. Kitchener is also showing some really robust strength, up an estimated 9.7%. But then you look at Cambridge, and it's softening significantly with a 13.9% drop. You absolutely cannot apply a blanket strategy across this region right now. If you're buying or selling, your reality changes drastically depending on which city limit you just crossed.
Now, walking through these specific metrics, I really want you to notice the days on market, or DOM. Kitchener is moving the fastest at just 28 days on market. Things are flying off the shelf there, relatively speaking, and prices are holding pretty steady, down only a tiny fraction of a percent year over year. Waterloo, on the other hand, boasts the highest average price at over $760,000, but homes are sitting just slightly longer at 31 days, and they have the highest supply at 3.2 months. Meanwhile, Cambridge, completely reflecting that softer sales trend we just talked about, is experiencing the biggest price drops, down a full 5% year over year. So the data clearly shows the top neighborhoods for buyers right now are those Kitchener areas with shorter days on market, while the biggest price drop opportunities, those are sitting right in the Cambridge segments.
Section 2. The property type divide, detached resilience versus condo declines. Let's see how this builds when we shift our focus from geography over to architecture.
Okay, brace yourselves for this one. Negative 17.1%. That is the estimated year-over-year price decline for condominiums and apartments across the region. That is a steep, shocking drop. While the region's overall average price is down about 4.4% to roughly $733,000, the condo sector is taking a massively disproportionate hit, largely due to higher inventory levels. Look, if you're an investor or a first-time buyer looking at the condo market today, this number literally rewrites your entire negotiation playbook.
To put that staggering condo drop into perspective, let's look at the other property types. Detached homes are down 6.7% in price year over year, but the underlying data shows they remain incredibly resilient with really strong, persistent demand. Townhouses are down 7.6%, operating in a fairly balanced state, but honestly, the real unsung hero here is the semi-detached market. Look at that, down only 1.8% in price, supported by remarkably stable supply. Semis are holding their value better than almost any other asset class in the entire region right now.
Section 3. Market drivers. The why behind the numbers. Let's look at the macroeconomic currents keeping this market afloat post-winter. So here are the foundational pillars supporting this April 2026 market. First and foremost, robust new listings. We saw 1,082 new units come onto the market. That is a massive jump of almost 40% month over month. That influx of fresh inventory is totally fueling market confidence and giving buyers the options they've been craving. Beyond that, the region's core fundamentals remain super intact. Consistent immigration is providing a rock-solid floor for housing demand. A highly resilient local tech job sector is continuously bolstering economic confidence. And finally, stable interest rates are giving buyers the predictability they actually need to comfortably sign on the dotted line. All of these drivers culminate in the current market sentiment, which, as you'd guess, looks very different depending on which side of the transaction you're sitting on. For buyers, the overall vibe is empowerment. You are gaining options, and with the average days on market creeping up past 30 days in places like Waterloo, you have real, tangible leverage to negotiate. For sellers, well, the days of blind bidding wars are paused. The sentiment is all about balanced negotiations. With a 2.9-month supply window, sellers can absolutely move their properties, for sure, but it requires realistic, data-backed pricing. Confidence is rising post-winter, but it's a very calculated, rational kind of confidence.
Section 4. The Q2 Strategic Playbook, Making Your Move. Time for some actionable, data-backed strategies.
Now, what's really interesting here is how expert Sidak Chhabra translates all this Cornerstone data, the 595 sales, the specific buyer's market conditions, into precise winning market moves. He doesn't just read the stats. He uses them as a strategic toolkit to engineer local solutions tailored for both buyers and sellers in this exact climate.
Let's walk through the critical steps of his playbook. Step 1 is utilizing real-time insights. You simply cannot rely on last year's news. You have to actively track that 2.9 months of supply and those month-over-month price index gains. Step 2 is to master negotiation. If you're a buyer, you absolutely must leverage the fact that homes are sitting for 30-plus days to secure better terms and pricing. And Step 3 is tailored guidance. Remember our data dive? The playbook says buyers should heavily target semi-detached homes because of their incredibly stable value, while sellers will find their strongest, fastest market focused right in Kitchener. This is how these abstract insights become a highly practical roadmap for your next steps.
So, the crucial point we are looking at heading into the second quarter of 2026 is continued stabilization. We're seeing signs of a modest recovery in benchmark prices. Is it a good time to buy? The report says yes, absolutely, if you use your leverage. Is it a good time to sell? Yes, but only if you use data-backed pricing to match the reality of that 2.9-month supply window. We've completely decoded the paradox. We've seen the month-over-month momentum, we've mapped out that intense regional tug-of-war, and we've laid out the strategic playbook. The data is clear, the market is stabilizing, and the opportunities are quite literally sitting